It's a story we're all familiar with. Former school teacher Jack Ma sees an opportunity for e-commerce in China and sets up his office in his apartment. Going on to build Alibaba, now worth more than $400 billion. The group contains several online malls, a cloud service, fintech and financial. And since floating on the NYSE in 2014 at $68 a share, the stock has risen 160%. But having set up a management team to take over, Ma is going back to his roots, education and innovation. Today, the Chinese e-commerce giant marks its 20th anniversary and will hold a private party to bid farewell to Ma, who steps down as chairman. He'll still be on the board, however. Let's talk more about this with Zachary Schwartzman, analyst for the internet at RBC Capital Markets. He joins us from San Francisco. Zach, the house that Jack built is built on very strong foundations, but are those foundations being tested now? Because we're watching the core market very carefully, and that is a core market in economic terms that is starting to slow down.
Thanks, Sri. We think that Jack has really paved the groundwork for a really strong management team. Daniel has been at the company for more than a decade. This is probably one of the strongest management teams across all of global internet, and we feel that they're perfectly well off as they transition.
Can I just stress test the bear case for Alibaba, because it remains very exposed to its core market and slowing growth by implication if the US-China trade war is prolonged. And let's face it, it looks as though there is no neat and simple resolution here to the trade war.
Yeah, Sri, that's definitely a common pushback and what the bears will point to. But we actually think it's an interesting or an attractive entry point for Baba here. And the reason why we feel that is because we think that Baba has transitioned the business over the past year plus. We're talking about a 50% EBITDA margin down to 30% as they've made investments in the growing consumer middle class in China. That's 150 cities of 1 million plus. In aggregate, 500 million, representing 2.3 trillion in consumption dollars. And we think that they're actually transitioned the business to weather this trade war. So that's actually one reason why we like the name here. And another reason why we like the name is you just had Jason talking about the privacy and regulatory issues with Google and some of these other large internet names here. We actually think that Baba may be better positioned than some of the than Facebook, Amazon, and Google from a regulatory and especially a privacy perspective, for better or worse.
So you don't see any potential pushback from regulators either at home in China or abroad with regards to any of Alibaba's business practices?
There's some pushback, but I think there's more of an alignment of incentives. I mean, we were just talking about privacy being one of the largest issues in the internet and in the U.S. I think that China is a very different market than the U.S. and some of the other internet companies. Specifically, citizens, you know, they're building a social credit system here. They're sort of used to giving up some of their data. It's just a way. It's a different way of life. It's a different culture. And we think that's actually not as large of an issue here. And then also from a regulatory perspective, look at the glowing cloud industry that they have. That's their largest client is the public government. I mean, it's definitely somewhat. We don't think there's as much of a misalignment of incentives, or there's more alignment of incentives than the U.S. internet names.
Okay, fair point. Thanks for clarifying. Zach, there are some reports that the PBOC might be developing its own digital currency. Do you see that as a threat to Alipay or Ant Financial, or an opportunity for either collaboration, or is it complementary? Which way would you look at it?
Yeah, it's tough to tell. These are mostly speculation right now here. So it's definitely a benefit for the Chinese government, and I think the U.S. government should also look at this. Specifically, there's an opportunity for individuals to, I guess, crypto presents an opportunity to own their for individuals to own their own data. And I think the U.S. right now is trying to figure out how do we deal with some of these companies that have been able to monetize some of these consumer data so well. And if the U.S. sort of paints a roadmap for potential regulation for the crypto industry, then it actually can be a potential solution for the privacy issues that are at stake in the internet names. But going back to BABA, it's tough to tell. It's too early. It's probably better for the Chinese for the People's Bank of China. I'm not so sure if it's necessarily better for Ant Financial or Alipay.
Zach, moving forward, are we going to see similar type of acquisitions along the line of the Koala deal? And to what degree do you reckon that particular deal strengthens Ali's core business and widen the moat, if you will, against its ecosystem rivals like Baidu and Tencent?
Yeah, that's really a compliment to Tmall. That's some of their international import business. These larger brands, those are the two largest players in China. So that definitely helps them widen their moats there. And we continue to expect more acquisitions from Alibaba to strategically build their moat here.
Okay, on the downside though, the digital business, that's been something of a money pit, hasn't it? Because of the high cost of acquiring content. So when do you reckon they're going to start turning that one around?
That's still going to be an area of investment, but on the last earnings call, Maggie did talk about that they were disciplined on the content side. And part of our call here is that we think that after having 15% EBITDA growth last year, we think that as they have this cost discipline, and part of that's in DME, that may also be in local consumer services such as LMA as they expand into Tier 3 cities and below, and Tenyao, we think they've learned to have this cost and expense discipline where you may actually see profit growth here after they've sort of troughed, we believe, which is potential from last year at the 15% last year. We're modeling 29% profit growth this year and 33% profit growth next year. And whenever investors sort of see this potential inflection point in fundamentals, they start looking at the story more, and we think that that's going to happen here at the Analyst Day in 2 weeks.
Indeed, on the 23rd and 24th in Hangzhou, China. I'm sure our Eunice Yoon will be on the ground to cover it. Thank you very much for joining us. Zachary Schwartzman from RBC Capital Markets.
Thank you, Zachary.
Coming up, after a tumultuous term, Nissan CEO Hiroto Saikawa is officially stepping down. We'll tell you why and what transpired at the critical Nissan board meeting yesterday. That is next.
Fly Qatar Airways and experience the world like never before. Qatar Airways, going places together.
Opening bell action.
Global markets under some pressure this morning.
Financials are the best performers right now.
Is there a risk here? Look at these stocks.
Squawk on the Street, weeknights.
Deutsche Post DHL is one of the largest logistics companies in the world. CEO Frank Appel talks sustainability.
We are very committed to have zero carbon emission by 2050.
Trade.
I hope that both countries benefit, and also I'm optimistic that China and US will come to a common ground.
And Brexit.
I think that you have to ask the British citizens for a second vote, because nobody told them what the outcome might be at the beginning.
Don't miss the next CNBC Conversation.
The stories and opportunities driving Wall Street and investors. Tyler Matheson, Melissa Lee, Kelly Evans. Power Lunch, Tuesday to Saturday.
Interactive Brokers pays 1.63% on U.S. dollars in your brokerage account. Do you know what your broker pays? Most U.S. brokers offer nominal interest in their brokerage accounts. Move your account to Interactive Brokers and start earning interest.
Interactive Brokers. Direct market access to stocks, options, futures, forex, bonds and ETFs. One world, one account.
China August consumer and producer prices due this morning at 9:30, coinciding with the market open. That's around the same time Hong Kong Chief Executive Carrie Lam is expected to meet the press ahead of her weekly meeting with top advisors, the Executive Council. This comes as Hong Kong is now in its 14th week of protest, which at the weekend saw demonstrators take their demands to the U.S. consulate to seek help from Donald Trump and U.S. lawmakers.
Business confidence in focus with the NAB's monthly read on that and business conditions for August coming through. Under pressure, retailers will be in focus. This is after last month's recessionary signals that they saw. Plus, we're going to have our eyes on the federal court here in Australia with the hearing into the $15 billion merger between telco giants TPG and Vodafone getting underway. The Huawei ban in Australia and TPG's insistence that it won't roll out 5G firmly in focus.
On Tuesday's watch list, a gauge of small business sentiment for August with the National Federation of Independent Business Survey. The government's JOLTS report on job opportunity and labor turnover for July. Earnings from Dave & Buster's and GameStop. Apple holds a media event at the Steve Jobs Theater at its Cupertino headquarters in California to launch new products. Apple is expected to unveil 3 new iPhone models, upgrades to the 10S, 10S Max, and 10R. The wild card is pricing.
In Japan, Nissan CEO Hiroto Saikawa announcing he will step down at a board meeting yesterday. This after he admitted to being improperly overpaid. Internal investigations had revealed falsified documents that increased his pay by about $900,000 in 2013. He will step down next week and the COO, Yasuhiro Yamauchi, will take over as the interim CEO. The automaker has lost about a quarter of its value on the stock market this year amid uncertainty following the arrest of the former chairman Carlos Ghosn. We'll talk more about Nissan, won't we, Sri, later on in the show.
Absolutely, we will. And Wells Fargo, in the meantime, cut its 2019 net interest income forecast, citing lower interest rates, a flatter yield curve and asset sales.
If rates remain in line with current market expectations, we expect full-year 2019 net interest income to be down approximately 6% versus 2018. This would imply that we expect net interest income in the second half of 2019 to be down approximately $1.8 billion from the $24.4 billion of net interest income we earned in the first half of 2019.
Wells Fargo is the first major lender to come out with updated guidance since the U.S. Federal Reserve cut interest rates in July. And official auto sales figures are out of India, confirming the slowdown we've been talking about there. Overall sales plunging nearly 24% in August, with passenger cars seeing their steepest drop ever of 32%. The government has promised to revive the sector, but automakers say current efforts are not enough to turn the tide. Mandy.
Well, lots more ahead on Squawk Box 3. We do keep it here as we're going to count down to the Opens in Tokyo, Seoul and Sydney. We'll be right back.
Interactive Brokers. Direct market access to stocks, options, futures, forex, bonds and ETFs. One world, one account.
Interactive Brokers charges 3.63% for a $100,000 margin loan. Do you know how much your broker charges? Upwards from 8.07% at Fidelity or Schwab to as high as 8.75 to 9.25% at Ameritrade or E-Trade. Move your account to Interactive Brokers and save at least $4,400, or much more if you're trading big bucks.
Justin Rose's 2018 season was nothing short of spectacular, posting a career-high 11 top 10s and finding the winner's circle twice. Rose finished the season on top of the final FedEx Cup standings, becoming the first Englishman to lift the FedEx Cup.
The Stone Conference is incredibly important to CNBC viewers. We follow the biggest hedge fund managers. This is a place where they all convene. CNBC has the exclusive right to be here. As soon as someone makes a pick, the market will move instantaneously, and then we will be immediately on television, online.
You can see here the stock has declined quite significantly today as his presentation went on.
The picks are tracked and followed for years to come.
Investors, when they come to CNBC, want to know not just what just happened, but what it means. My role is really to illuminate market trends.
The story for the year has been if there's one jolt to one part of the market, it gets buffered by something else.
The market is a mechanism for processing all the world's information all the time, constantly. It's really about what it means for what's happening in the world. CNBC is our window on the markets, and markets are our window on the economy.
It's 7 a.m. in Singapore, 8 a.m. in Tokyo, so ohayo gozaimasu to all our viewers there. Hello from Singapore, I'm Sri Jagaraja. You learn something. You learn a language if you watch Squawk Box, don't you, Mandy?
You most certainly do, so I'm going to throw another language at you. G'day. G'day, folks. I'm Mandy Drury. Let's get to your headlines this morning. Oil prices getting support after Saudi Arabia's new energy minister commits to supply limits.
UK Parliament due to be suspended, but not before lawmakers manage to enact a bill that forces the government to either get a divorce deal or delay Brexit.
And despite China's move to increase liquidity with another RRR cut, the PBOC did not roll over medium-term loans, so our expectations of a rate cut overdone. Well, Japan will start trade at the top of the hour, so the CME Nikkei futures are pointing to a moderately positive start to the trading day there in Tokyo, where the previous close was up by 0.5%. As for the dollar-yen, there might be somewhat of a tailwind there because the dollar has been creeping up against the local currency. We're sitting at 107.21 right now. As for this side of the world, i.e. the Antipodes down here, the New Zealand market has been open for about an hour, and it is currently trading just marginally to the downside, while the Kiwi dollar is sitting at 64.2 US cents. As for the Australian markets, well, they will open in 1 hour's time from now, along with Tokyo. The SPI futures are suggesting it's going to be a soggy start to the trading day. It is rather soggy and cold and windy out there, actually, and the previous close was flat with an upside bias. As for the Australian dollar, though, it is a little bit stronger than where we were this time yesterday, which was 68.4, now at 68.6 US cents. Marginal gains, but we'll take them, right, Sri?
Absolutely, we will. Are they going to be sustained is the question, though. Another asset class that is rising is crude oil, jumping over 2% overnight in the regular session after Saudi Arabia's new energy minister, Prince Abdulaziz bin Salman, said he is committed to the output limits agreed to by major oil producers. Prince Abdulaziz also said the kingdom is aiming to list Aramco as soon as possible, with market expectations for a local listing this year.
The IPO really made us all focus on even exerting and accelerating every possible effort to highlight this and to magnify this and to recheck what we have been doing in the past and how can we emphasize and improve that model, because that model saved us and rescued us in terms of our economic well-being.
Mandy, a couple of observations that I gleaned from yesterday's annual Asia-Pacific Petroleum Conference here in Singapore. It's very clear that the Saudis do want to fast-track the Aramco IPO, and there is a perception that the former energy minister, Khalid al-Falih, was perhaps too cautious and perhaps not fully aligned with Mohammed bin Salman's outright vision on Aramco. But you know what? However you slice it, the Saudis need a far higher oil price than what we're getting now. And that is twofold.
Like something
they
closer
need it
to
for 2
80,
reasons.
right?
Precisely. They need $80, $85 a barrel to balance the budget. And to support a decent valuation, $2 billion seemed to be a bit too high. $1.5 billion seems to be more realistic. But these are very, very challenging times because the Saudis are not only facing rising US shale production, a lot of those volumes are finding homes out here in Asia. So they are challenging the Saudis directly for market share on their front doorstep, as far as their demand doorstep is concerned. And then, of course, you have this overarching issue of unprecedented macroeconomic uncertainty that the Saudis have to deal with, and you've got to imagine that they're pushing on a string right now.
Absolutely, and let me just bring up something that the Russian Central Bank has said, that in its risk scenario, they have not ruled out oil prices falling to $25 a barrel. $25 a barrel, so almost half what we're sitting at now in the year of 2020. And it says that it could be triggered in the case of lower demand for energy products around the globe and worsening prospects for global economic growth. So it is, yes, it is a worst case scenario naturally, but nonetheless, it is pretty severe. And they also say in case the risk scenario actually materializes, Russia's inflation could jump to 7 to 8% next year, while GDP fell to 1.5 to 2%. So Russia, along with Saudi Arabia, would like to see a much higher oil price.
I think more realistically, in the fourth quarter, what we can expect is further downside pressure in the oil price because of the macroeconomic uncertainty, etc. So 55 seems to be the bottom. 50 cannot be discounted either. But Mandy, there are some upside drivers that we need to be cognizant of. And let me get a little bit boffinish and wonky here for a minute, because if you look at the structure of the futures market, it is backwardated, which implies some tightness moving forward. That's what traders perceive anyway. And that may be driven by a couple of factors. US shale is suffering because of this fight for market share. And you know this from your time in the States. They have really dialed back on capital spending, so we could see those cuts starting to manifest themselves later on this year and into 2020. The other factor here is IMO 2020, and that is when tighter marine fuel specifications kick in. So a lot of refiners out here and globally are going to be chewing up and processing more crude oil in order to meet those specifications for marine fuel. So there are some upside drivers here.
Of the high sulfur products?
Correct.
I mean, it will change the demand in terms of what products are out there.
Right, but there are some upside drivers here, but moving further forward, I'm talking about the longer term, 1 to 2 decades. On the bearish side of the ledger, we've got to keep talking about the fact and reminding ourselves that decarbonisation is happening. The rise of renewables is happening, despite the lack of leadership as far as climate change goals are concerned. There are more EV cars out there. Yes, it's not going to happen overnight. We're not going to see the internal combustion engine disappear overnight. But that structural shift is happening. But in terms of peak oil demand, what I've been hearing, it's possibly a 1 to 3 decade story. So there are longer-term implications here, and there are longer-term implications for Aramco. Oil is a sunset industry.
In the meantime, we're watching for that local offering, perhaps ahead of a larger offering on the international markets. Thank you for putting on your boffin hat, Sri. We like your boffin hat. I'm going to hand that boffin hat over to someone else who's standing by in the wings in Beijing. Most certainly is. China stocks got a lift yesterday after the PBOC said it would cut the bank's reserve requirements again, and offshore yuan weakened after strengthening over the weekend. In a surprise move, the PBOC did not roll over medium-term loans yesterday, though, suggesting it maybe doesn't want too much liquidity in the market. Well, later today, we get a fresh read on China's consumer and producer inflation. Let's bring in Eunice Yoon joining us live from Beijing. You've been past the boffin cap. You're the China boffin, Eunice. Is the implication here that those who are perhaps hoping for a rate cut aren't necessarily going to get one, and also that perhaps the authorities don't want too much liquidity being pumped into the system yet again, because it would once again take us back to the bad old days of overcapacity?
Yeah, I think that's a major concern for a lot of the authorities here. They don't want to be seen as doing anything too aggressive, even when it comes to stimulus, because they don't want it to be seen as something too disruptive. So the message so far from Beijing has been for steady growth, especially ahead of the October 1st holiday, which is a major political event here, the 70th anniversary of the founding of the People's Republic. But Mandy and Sri, I also want to show you a headline in the state paper that we are just starting to see now. This is a state paper that focuses on public health that is run by the Global Times, the Communist Party paper. And the headline reads, "Eating less pork is good for you. Your wallet and body will thank you." So this is the message that we're starting to hear out of Beijing, which I think gives you an indication of how concerned the policymakers are here about the pork shortage that we're seeing and, in turn, rising pork prices. And those rising pork prices are expected to hit the consumer level when we get those numbers out later today. The overall number should look better only because those rising pork prices brought on by the African swine fever, which has been ravaging the pork industry here, will likely be offset by some of the falling prices in vegetables. But the food price is what we're all watching for over here, because more recently consumers have been expressing their concerns about some of these higher prices. Again, not only for pork, but for vegetables and fruit as well. Now, the producer price level is another big concern. We're expecting to see a deepening of the producer price falls that we saw last month, and there's been a lot of concern about deflationary risk returning to Beijing, that this is going to be another issue that the policymakers are going to have to grapple with, the potential of seeing higher consumer prices, but then lower producer prices. So these are prices of goods at the factory gate. A lot of that, again, is because of the lower demand that we're seeing here, brought on by the overall sluggishness in the global economy. And then, of course, you throw on top of that the trade war with the United States. Now, in terms of the pork, like I said, that's really what people are concerned about. And the government, just in the past several days, has also been making a lot of statements about what they're going to try to do to try to improve things. So just yesterday, the government said they're going to offer more subsidies to large-scale farms, or people who want to construct these large-scale pig farms. They also, surprisingly, have been trying to change the designation of pig farming. They had earlier some restrictions on exactly where you can have a pig farm. Now they're talking about easing those restrictions. They've also been offering some help to smaller scale farms, which is another reversal of the overarching policy when they've been trying to push bigger farms to get rid of some of these backyard farmers. Sri, the other thing that I thought was interesting was just in the past couple of days, the government also said they're going to be releasing more emergency pork from the emergency strategic pork reserves, not only in the south, but they've just released a big tranche, but nationwide, and that's because later this week, on Friday, China's going to be celebrating the Mid-Autumn Festival, and everyone knows that Chinese people love to eat pork, especially when it comes to holidays. And you know, I don't know, Sri, if you eat pork, but I certainly do, and I totally understand that the authorities here do not want the public to get too angry that they don't have pork on the table.
I stopped eating it for about a week or two after watching Babe. But I'm partial to a bacon sandwich, Eunice. But, I mean, seriously, if we could, the official line, it seems, is that demand conservation for pork is the next strategy at Beijing to try to keep a lid on food price inflation, at least. To what degree does this muddy the waters for the policymakers at the PBOC, or is deflation the clear and present danger now?
I think that it looks as though the policymakers are more concerned about deflation, and that there's just exactly what you said. There have been a lot of economists who've been wondering which part of the equation the policymakers here are going to feel is more important, and it looks as though they're more concerned about the falling prices on the producer level than they are on the consumer prices. And it could also be because the government is able to address the pork issue by taking other more targeted measures. But again, you know, it's really difficult to say how big this pork situation is going to be, and at what point policymakers are going to say, actually, pork issue is going to become a destabilizing situation. Because it was also interesting just recently, Mandy, the vice premier, one of the vice premiers, had made some comments warning that pork shortages could affect, he said, the happy and peaceful atmosphere during the 70th anniversary of the People's Republic on October 1st. So, you know, that's a suggestion that there is some level of awareness of the implications to social stability if they don't get the pork crisis under control.
Rioting on the streets over pork. It's a serious subject, I'm not joking, but on a lighter note, all this talk of pork and bacon sandwich is making me feel incredibly hungry, so I feel like it's a pork emergency over here right now. I need some release of reserves, but it's actually, as you say, a very serious economic and social issue. Thank you, Eunice. We will check back in with you very shortly. Coming up, if you think the average investor is set to get a lifeline from central bank stimulus, our next guest says, think again. We're going to be hearing from Pengana International Equities Fund about where to best park your money, not pork your money, park your money after the break.
Good morning, Mrs. Wong. Good morning. Your favorite.
Thank you.
Good morning, Mrs. Wong. Good morning. Look what I made for you.
Thank you.
Mrs. Wong? Help! Help!
Good thing your grandson was around when you had your fall, Mrs. Wong.
They have dreams and they have hope.